our weekly strategy roundtable where we talk about current market volatility, current conditions, what are the risks in the market. We have earnings season starting, we have unemployment data, inflation data hitting today, geopolitical risk, right, situation in Venezuela, Cuba, Iran, and how it might impact the market, tariffs. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. My background is in technology. I've been trading and managing my own money for over 20 years right now. Started Yellow Tunnel with the idea that trading psychology is just as important as reading the charts and building AI. Keith Harwood joined Yellow Tunnel about almost 2 years now. So between Keith and I, we are managing live trading room, and we in the live trading room, we trade signals that are generated by the AI models that I've been developing, almost 20 years. Again, my background is technology, worked as a CTO of several publicly traded companies. When the companies went public, like Options Express, MediaOcean, I decided I'm going to manage my own money, and here I am. So background, quant models, programming, and Keith more on option trading, market making. He was on the floor of exchange, trading futures, trading indexes. So that's his background. Disclosures are very important. I'm going to go through specific trade details like JPMorgan, the Bank of America, and other opportunities in the market. So it's important to read the disclosures. If this is the first time you see the disclosures, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, before we jump into trading psychology, let's talk about current market conditions. We'll look at the JPMorgan earnings. And market in general. So despite all the geopolitical risk and investigation, Jerome Powell's investigation, Venezuela, right, Iran, tariffs, right, ongoing negotiations with China, whether they're following their obligations to buy, soybeans and other products. Midterm elections, this is your midterm elections. At least as of now, you can see 10-year yield actually pulled back after the inflation data. Inflation data is going in the right direction. Inflation is cooling. We had unemployment data. I think it was also stable for now. And you can see spiders are hitting new all-time highs, marginal new all-time high in the past few days. Continue to grind higher. A lot more momentum in value stocks. So equal weighted S&P value stocks continue to grind higher, making new all-time highs. Small caps continue to make new all-time highs. We had another record day in small caps. Technology is still kind of behind. We're within 1% of all-time high, maybe a little bit more, but still trailing behind stocks like NVIDIA, Microsoft. Their chart patterns are pretty bearish, right? Microsoft pulled back today. And Meta. But again, not all the stocks are under pressure in QQQ. Stocks like Google, right, continues to make new all-time highs. Western Digital, some of the infrastructure plays, data centers, or hard drives, computer peripherals, hard drives. This is all that's required for AI. They're all kind of vertically going higher. All right, any questions so far? So we're trying to figure out what's next, right? Where are we going next? If you look at the yellow tunnel for our main models, short-term models like aggressive power trader, if you look at the spiders, it basically shows you in the next 10 days, potentially we can get to the 700 level, right? The most important level right now, SPX 7,000. In addition to all the geopolitical risk, we do have VIX expiration tomorrow. we have expiration on Friday, and that also causes volatility in the market. So I would expect this week to be volatile. In addition to earnings, inflation data, you also have expiration in futures and equity contracts. Most of the contracts concentrated in January, and now they're going to expire. People are going to roll them into February, March. And then the question is, as a result of this rolls, what, will the market break through the 7,000, or will it wait or not? So 10 days we see 7,000 on SPX or 700 on SPY breakout, 3 months, but in the next 2 months it actually sees that we're just still trading in the range somewhere between maybe October, November lows, right? 6,600, 6,650 on SPX and 7,000. So not a lot of momentum behind the pools right now. So if you look at the now positioning, this is AI data from Yellow Tunnel, but if you look at the positioning data in SPX, it basically shows you that bulls are in control, right? We're trading above the gamma flip point 6,900. So as long as we're trading above 6,850, 69 in this green territory, bulls are in control, right? Brokers, broker dealers are supportive, and they will be, buying on any pullbacks. But again, major overhead resistance right now is at 7,000, about 120 billion contracts that are expiring on January 16, right? Probably more, 150 billion contracts. So very large positioning. You still see February start growing, not a lot of position. March, a little bit more, so almost 50 billion in March. That's not bad. But again, this is what can cause volatility this week, in addition to earnings. So the question is, as we're going into February and March, let's look at February. Let's remove January. Let's go into February and March. So scenario number one, we break through the 7,000, right? And we get to one standard deviation move between now and end of February is 7,200, right? So I would say this is scenario number one, somewhere break above 7,000, 7,150, and 7,200, 7,300. So more than one standard deviation. Again, trading is about distribution of possible outcomes, right? You look at the distribution curves, and we basically say 70% of the time, right? 70% of the time, roughly. 67%, the market should be trading in this two, right? Somewhere between 7,150 and then 6,700. And then scenario number three, we either retest the lows of October, November, or break through the September, October lows, which is around 6,500, 6,550. All right, so how many of you say we will break 7,000 and not just short-term, kind of false breakout, but actually confirm breakout and move towards 7,100, 7,200? How many of you say no? Potentially, we're already at 7,000, so you just need one good news to break above that level. So maybe we'll have 7,100, but it's a false breakout, and end of February, maybe beginning of March, we're all over, and we have scenario number two, kind of trading in the range. And how many of you say scenario number three? Maybe escalation in China-U.S. relationship, right, or geopolitical risks in Iran or Venezuela or Cuba, right? Some kind of instability that spills over into U.S. markets. And then scenario number three. All right, Alan, Dennis, George, Joe, John, Ronnie, Tony, welcome back. What do you guys think? Scenario number one, earnings season is strong. Companies are spending a lot of money on AI. It's the age of efficiencies. People are concerned about valuations and how much efficiency or AI can bring, right? Or growth in wages, right? The earnings power of consumer. Will AI help people spend money because they're going to be more efficient and their wages are going to go up? So then scenario number one. Scenario number two, market is at historical valuations, and even though yes, AI stocks, AI companies are in, there's a lot of investments into infrastructure, data centers, but still, for any good news, there'll be bad news, and we're just trading in the range, right? Then maybe 10% tariffs on credit cards will take into effect. Maybe you can, raise salaries of aerospace and defense companies, right? Intervention of government in the corporate governances. So two and three, we have signs of either recession or hyperinflation. Right? Maybe recession ticks up, but the unemployment numbers tick up significantly, right? So that's scenario number three. All right, Alan, Dennis, George, Joe, John, Ronnie, Tony, what do you guys think? Scenario number one, scenario number two, scenario number three? Anyone? Round two, thank you. Alan, Dennis, George, Tony? All right, it looks like, thank you. Most of you have said two. I'm going to go with 2-2. I think we do have a breakout, but I think it'll be short-lived. I don't think it's going to be this expiration that we're going to have a more meaningful pullback. I'm talking about, I don't know, 10% pullback, 20% pullback. But maybe once the earnings season is over, which is usually middle of February, right? Then, assuming there's no other positive catalysts, something's going to happen in the market, whether it's February expiration or some geopolitical risk or China-US relationship. But I think we're gonna just kind of stuck in this range, and maybe more towards end of March, end of April, we continue to grind higher, So that means that at least trade what you see, not what you think, right? That's my favorite expression. Until we break 7,000 level on SPX, I would consider to have more cash or hedge your positions, right? I have a QQQ put spread in my portfolio. I have spreads. I'm selling calls against stock. I'm trimming my stock positions. Raise cash. Decrease your portfolio delta, right? Because if we do get to 6,800, 6,700, 6,600, these are all viable levels, right? Where depending on how much cash you have and what your position look like, you might want to start considering adding to these positions. But if you don't have cash, then usually you get stopped out, and then you don't want to be in that situation, right? So consider having more cash. Any questions so far? All right, so on yellow tunnel, we talked about aggressive power trader. These are short-term trading signals. They're not earnings related. I know in our promo, I was talking about JPMorgan. We're going to talk about this shortly. But we do have, airlines. Today, Delta Airline did not have, they had a good earnings, but their future revenue, kind of a forward-looking guidance, was weaker than expected. So again, stock had a strong rally, so a lot of people using this as an excuse to trim their position. Materials have been strong. MAS today, we had ALB stock as a signal. Today we have Oracle, signal in Oracle, and signal in WDC, Western Digital. So these are short-term signals. You can trade them using option portfolio, options, right? If you want to take leverage, either this week, next week, or monthly expiration, we don't have them. And then if I trade any of these stocks, you would see the orders, right? You would see the orders or positions if I have any of these orders in position. But the idea of aggressive power trader, you get signals every day. You can look at the history of these signals. What was there yesterday? Yesterday was AMAT, Google, Morgan Stanley. These were the signals from yesterday. Stanley's down, actually. Okay. And you can watch the recordings live trading room recordings every day, strategy roundtable recordings, and different other topics. And we have AI analysis. You can type in, let's say you want to know what's going to happen with NVIDIA, or what might happen with NVIDIA, right? What is the current trend? So you can type in the stock, type in, see that actually model is bullish on NVIDIA, that I think the path of least resistance for NVIDIA to start rebounding. And probably we can't break 7,000 without Microsoft, Meta, and NVIDIA. So everybody's waiting for their earnings. Hopefully they have strong earnings, and then momentum will continue. If not, then you might have if we can't break 7,000 by, I would say, end of January, I think the market could be vulnerable for deeper pullbacks. So that's aggressive power trader. The model runs every day, gives projections, gives signals basically every day before market opens. You get email and you can see the list of stocks. Weekly power trader model, different model. It runs every Sunday. It takes longer term view. It analyzes more data, right? Earnings, momentum, consistency. So 5 to 10 days is the projection. Usually you can hold the position maybe 2 weeks, maybe 4 weeks, right? These are meant to be longer term trades. You can sell put spreads, you can buy call spreads, you can buy call, buy stock. This week we had AMAT, Caterpillar, Google, Hasbro has been trending high, RCL, and Schlumberger. Any questions? And again, if you see any orders and positions seen here. So now today earnings, right? We have earnings power traders. So we have Bank of America announcing earnings and JPMorgan. So JPMorgan was flat in the morning, right? Slightly down. Actually, it was up, then slightly down, and then it did pull back to 312. So same thing. You would see orders and positions. I closed the call spread and I'm waiting for the put spread. And put spread right now is trading against me, right? So I sold the spread for 87 cents, and right now to close it, it's cost $1.40. Still have time. We'll see what the rest of the banks say tomorrow. Maybe this original reaction at some point is going to be overdone because the earnings were pretty decent. So that would be an example of earnings power trader, right? So we have a closing bell. You can watch the trading room from yesterday, right? And it will explain how I trade this, why did I get into the trade, what were the mechanics, right? Today, Bank of America. So in the live trading room, I didn't do it under earnings power trader, but we did discuss Bank of America. So I wanted to share with you kind of the thought process of how we get into the trade. So, I mean, obviously we look at the liquidity, we look at the signals from AI, but also positioning, right? So you can see Bank of America is trading at 55, and you can see major support and resistance level based on where the people are positioned. So the next gamma level is at 52.5 and 57.5. So ideally you want to target 57.5 and 52.5 strikes, depending if you want a short volatility or long volatility. Assuming Bank of America has similar results to JPMorgan, where it kind of trades in a range, it was up slightly, then it was down, then maybe up. Best thing is to sell premium, right? Because volatility is higher than usual, right? If you look at the volatility chart, right, for Bank of America, as we approach in the earnings, you can see IV percentile, IV rank starts going higher, right? So implied volatility also going higher. It's not as strong as it was in April or October, but it's getting there, right? So if I actually look at the puts and calls, and a lot more people are bearish, right? So people are positioning the potentially, to the downside, 2 to 1 almost, right? Where most people are buying puts, right? At least in January expiration. February it's pretty even, and March is pretty even, but right now more emphasis on puts. So if you agree with this, then you can buy put or put spread, kind of go along with everybody. If you're more of a contrarian, you think that Bank of America decent stock or like JPMorgan, then you would sell put spread by targeting these strikes, right? By targeting 52.5 strike, right? This is 52.5 strike, and this is 57.5 strike. Any questions? Alan, Anupam, thank you. Hopefully you got my email. Let me know if you got my email. Thank you for your interest. Dennis, George, Joe, John, Ronnie, Tony. Let me know if you have any questions. Anupam, is that short for Anup? I know one Anup in Chicago. I assume it probably is. Or maybe it's a different name. Don't know. Different. No, different. Got it. All right. So it is Anupam. Okay. All right. Learn something new. Okay. So then in the live trading room, if you watch the recordings from today from the earnings power trader, then you would see how I was selecting these strikes and the analysis that goes into puts, calls, and more important, finding these support and resistance levels, right? By looking at where the open interest, right? Most of the open interest you can see right now out of the money is the 52.5 and 57.5, right? And if you look at Bank of America, 70% of the time between now and Friday, it should trade above 52.50, right? Downside risk, and on the upside, all-time high, right? So if you look at distribution of outcomes, probably it looks like something like this, right? That we're gonna spend majority of the time between now and Friday somewhere in here. So then you can sell premium, sell put spreads here, or sell call spreads here, right? If you think that it's not going to go beyond 2 standard deviation, right? If you think that because everybody's positioned bearishly, more conservative, like into JPMorgan, right, where you do have almost, beyond 1 standard deviation, then you would buy puts, right, or put spreads, right? Any questions? You can see financial stocks pull back, Amazon pull back. All right, so that's aggressive power trader, weekly power trader, and earnings power trader. We have dynamic power trader. You can also follow my portfolio that I trade. So we have Amazon, I have Amazon position, I have Cisco position, JetQ, I have Morgan Stanley position, Pelletier, I have a QQ put hedge, and I have Raytheon. So you see a list of stocks and options where I either have positions or orders, right? I, close at 77 call. In Cisco, still have a stock. I trim Amazon position. I trim JPQ position going to the earnings. I'm in TJX spread. So all of these are a combination of both stock and option trades, right? Sometimes I buy or sell single stocks, sometimes options. You can see all my positions. The same thing. You can enter either Discord ID or your phone number, and you will get SMS messages. In SMS settings, history, all the portfolios, what it looked like every week. And again, live trading room recordings and AI analysis for individual stocks. Any questions? David, welcome back. Anup, you did not get my response. I would check spam because I did send email. I can, I guess, send it again. Let me see. Sent it yesterday, last night. I would check. Did you get it? Yeah. Reply to your question. I'll remove the link. Let's see, because sometimes it removes the link. Okay, so I just sent you a reply back. Let me know if you got it, or just check the spam. David, did you get my reply back? I did send you, probably didn't get it either, so let me send the reply to David. Oh no, you did reply back to me. Let me try it again. David. I'll remove the link. Okay. Okay, yeah, Anupam, I just resent the email. David, I also resent the email. All right, any questions about different portfolios? Aggressive power trade, the weekly dynamic earnings profit accelerator. Where do I see the market going in the next couple months? I think some of you came in late, so we looked at the positioning. We looked at the model for spiders, longer term model, 1 month, 3 months. I mean, it does see potential break above 7,000 on SPX, but it'll take at least maybe till March or end of March to recover. But it does see a pullback in Q1, potential pullback in Q1. So I agree with the model. When we look at the positioning, first, 7,000 is a lot of overhead resistance. This is where all the open interest, all the contracts that people are buying at 7,000. So you need some kind of a positive catalyst to break through that level. Unemployment data, inflation data didn't do it. Earnings from today didn't do it. So we'll see. It might be that we have to wait till end of February. But for now, kind of, there's no, maybe AI earnings, right? Once Microsoft and Google start announcing earnings, and IBM and Oracle, then people will have a clear picture about AI, whether the investment is paying off and they are generating revenue, or vice versa, right? Because that's the biggest unknown, I think, in the market right now is these, expensive valuations and AI stocks and overall market valuations. So we put 2 that probably trades in the range. I think that in January we do break above 7,000, but maybe it'll be a false breakout where by end of February, or beginning of March, we retrace, most of these gains and maybe revisit 6,700, 6,600. So that's the view on the market. In terms of some of the things that we cover in live trading room, I encourage everybody. No, AI projection, Yellow Tunnel and TradeSpoon stock forecast toolbox projections are the same. The only difference is that you have this earnings power trader, and you have in aggressive power trader, sometimes you have more signals. Not today, right? Today there's only, oh no, we had extra. So in TradeSpoon there was 3, and in Yellow Tunnel there was 4. Yesterday there was more. Yesterday. Yeah, here there was more. Schlumberger, Neiman Mining, LEV, Lumina, AMET, and so on. All right. What else? So in live trading, we talk about, again, concentrating on things that are within your control, risk management, and goals. I encourage everybody to have a clearly defined goals, easy to achieve goals, which you write down in your trading plan, and you follow these rules. You treat trading as your business, right? If you need help with that, right? If you don't know how to build trading plan, you haven't done this, you haven't owned the business, Then we do have Keith, who has done it all. He has, he has a business, and he's been managing his own money. So we do have one-on-one consultation under context. Find the time that works for you, and schedule a meeting, and Keith can help you come up with the custom plan. He also does one-on-one coaching in case you need more than 25 minutes. But that's something I would consider. But short-term, clearly defined goals. Here, I'm looking for 1% price fluctuations, right, to capture profit, right? If the stock in one day can move 1%, then that's reasonable, right? And if it goes down 1%, then you get out of the trade. But you're looking for 1% fluctuation. Oracle is probably more volatile than mascots, so okay, Oracle maybe do 2% or 1.5% stop loss. But you have clearly defined target gain and stop loss, right? 1% is probably aggressive, per day. And the idea is not to risk more than 2.5%. So if you got into Oracle, let's say Oracle is down 1.5%, right? And you get in, right at the open. Right, if you got in at the open, let's say 204, and it dropped more than 1.5%, then you would exit out, right? If your stop level is triggered. If you want to be more conservative, maybe you look at 200 is a good support, so maybe right below that one, maybe stop loss is 197, 2% stop loss. Then that would be your exit. But whatever your strategy is, you want to make sure that the suggestion is not to risk more than 2.5% of your portfolio per trade and only have 4 active positions. Right, so every day you pick one, and until you have 4, and then you start the week with 4 positions, and then by the end of the week you close all of them. If you do an aggressive power trader, if you do a weekly power trader, same thing. You can have 4 positions, but then you hold them for a few weeks, right? For a few weeks, and then every few weeks you rebalance your portfolio with the new signals. So that's weekly power trader. Right, aggressive power trader. Oh, weekly power didn't go over. So weekly power trader, you do get more signals here as well. So this week we have Caterpillar, AMAT, Google, Hasbro. Hasbro is doing well. Royal Caribbean actually pulled back a lot, but that was a signal this week as well. And what else? And those are the most important things, like risk management and keeping your journal, keeping trading plan and writing in terms of clearly defined, very simple targets, that are easily to achieve, right? If you want to make 5% every day on stocks, well, that's difficult, right? Unless you're trading penny stocks or something that's very volatile, it's very difficult to achieve. So you have to have clearly defined and easy to achieve goals, and concentrating on things that are within your control. Like, you don't know if we're going to invade Cuba or if China is going to invade Taiwan. You don't know that. So I wouldn't try to, or you don't know how people will react as a result of the inflation data. So I would spend more of your time and energy on concentrating on things that are within your control. Goals, process, and risk management. And it is a circular process, right? I do almost on all the webinars, I talk about thinking fast, thinking slow, right? This is a book by Daniel Kahneman. Very good book. It's great. I mean, it's great for every doesn't matter if you, but any discipline where you deal with uncertainty, right? And he talks about stock market. He talks about pilots, FBI and special forces. So all of these examples are relevant. Right, he actually has got Nobel Prize for financial engineering, prospect theory. Right, he's very famous for prospect theory. And these are the 2 things that I think every trader should be aware of. I mean, game theory, self-serving biases, all of it very important. But this concept, kind of in the chart, especially if you're numbers oriented, right? This clearly tells you that there is a skew, right, that we feel about losses a lot more than we about our gains. And because of this asymmetrical relationship, this is the most common mistake we make, is that when the trade goes against you wait, right? Because you're hoping that the trade is going to come back. But if the trade goes in your direction, you're very quick to react and take the profits. So your profits, it takes, maybe three profitable trades and one losing trade takes all your profits away, right? It happens to me, it happens to everybody. First step is, self-awareness, right? He's also famous for self-awareness, emotional intelligence, very important concepts that, that are also covered in this one book. And there's a lot of book on emotional intelligence and kind of how do you make decisions, right? That this is a repetitive process. You build a journal, you build a plan, you follow the rules, you grade yourself every time you trade. And then it's a repetitive process. You go back and revisit. Maybe I should adjust. Instead of 5% target gain every day, maybe I should adjust to 2%. Right. So it's a repeatable process. You want to go in circles and continue to adjust it. And so I think this is something that I would recommend if you're serious about trading and success. Read this book or something similar, and try to understand prospect theory. Read up on that. Game theory, right? It doesn't matter what I think. What matters is what majority of the people think. Trade what you see, not what you think, right? So game theory, obviously self-serving bias, right? Hindsight bias, all of the important topics that you want to review and be aware of. Set goals, right? It's all about compounding investment. 0.5% a day or 1% a day, if you're aggressive trader, might not seem like a lot, but if you compound it and you make 1%, even every week 1%, 52 weeks without compounding, it's 52%. With compounding, 65%. So this is something to keep in mind, right? Kind of goals and be patient. And it takes time to internalize this information, right? A lot of people say I talk fast, a lot of information. Yeah, watch the recording, live trading recording, participate in live trading recording, and that will help you, achieve your goals. All right, David, did you get my email? Anupam, did you get my email? I resend it, so hopefully you guys get it. If not, it's probably in spam, I assume. So please add on the spam topic, please add vlad@yellowtunnel.com to your list, to your contacts in your email. If you're using Gmail or Yahoo, add it as a list of contacts, then at least it's not going to go into spam. Or you can find the email in spam, just say that this is not spam. But unfortunately, because we're using these promotions and links, we get flagged. Not always, but you did get it. Good, perfect. All right, so yeah, please do me a favor, add us so you get it in your primary inbox. Other than that, that's all. Pops, JOP. All right, so we do have more people joining kind of a little bit later. So to summarize, most important is trading plan and journal, right? It has to be mechanical, right? You want to be a disciplined trader, right? The reason I started Yellow Tunnel is because psychology is important. So you want to be a disciplined trader, you want to be a mechanical trader. That means you need to have a process which is repeatable. I mean, if you have your own business, you kind of done this before, so it comes innately. If you haven't had your own business, or you're not very process oriented, right? Different people have, excel at different things, right? Some people are very creative. They don't want to be cornered or boxed into a process, or like my wife, she doesn't like process, right? She wants to be free-spirited and makes decisions whenever she feels like it. That's great. That's why I love her. But that doesn't work in trading, right? It doesn't work in trading. So you want to read a book like this, if it doesn't come naturally, to try to internalize this information that it's a circular process, right? You basically, you can draw it like, you have your trading plan, right? Then, you go in, you start trading, right? Then you go in, you look at your results, analyze your results, right? And then you can put more steps, but the idea is that then it goes back. Okay, do I need to review you don't want to adjust your trading plan every day. That's also, it should be stable. But every month, every quarter, after these repetitive processes, after you look at your journal, right? Trading plan, trading journal, right? You want to adjust, right? And usually it's all about position sizing, right? Because in the books, what he does talk about a lot is that we're all, right? Not all, but most of us, you know, QQQ is that 50-day moving average. You know, we're pulled by fear of missing out, right? People buying fear of missing out, FOMO, right? People, you know, Bitcoin is down for the past year. You know, if you're a Bitcoin enthusiast, you have fear of missing out that Bitcoin is, you know, going to rebound and going to be at 200,000 level, right? So that's one force. So you don't make trading decisions because you look at the charts or because you have, you know, certain opinion about stable coins and, you know, dollarization. But, you know, fear of missing out is usually, if you're being honest with yourself, that is the biggest decision that you're making. And the other one that also covered in his book, very well documented, you know, psychology concept, is fear of future regret in general, right? Those are the most prominent emotions that drive our decision, is our fears and regrets, right? You know, gratitude is another emotion that feels, you know, drives our decision. But these are the kind of, we're all experiencing that. So recognize it, keep it in a journal, and by having process oriented, where you set target gains and stop losses, you don't break them no matter what, right? And you grade yourself, that can help you deal with fear of missing out and fear of future regret, right? So it's all about number of positions and position sizing, right? And, you know, AI signals, I mean, they're great, but, you know, how you manage them is very important. All right, any other questions? All right, Alan, Anupam, David, let me know if you got email. If not, reply back to me, but I did send you links. Dennis, George, Joe, John, Pops, Ronnie, Tony. All right, guys, thank you very much. Have a great day, and all eyes on Bank of America. You know, JPMorgan still have time till the end of the week, and next one is we have JPMorgan, and I'm watching. I mean, they're all liquid name, but I'm watching Citigroup, Morgan Stanley this week, and Thailand Semiconductor. All right, thank you very much, and have a great day.